Yeah. That's what I heard. No, something ridiculous.
Good afternoon, everyone. On behalf of the FAIR Initiative and the Jeremy Collier Foundation, I welcome you all to this event. And this is going to be the best event that you will attend, I promise you that. The key motivation for organizing today's event is to create more awareness about the risks in the livestock sector, particularly in the context of their financial materiality. So we'll navigate the intricate interplay of global climate change, financial systems, and food systems by listening to some of the stalwarts who are actually pioneering change in this direction. And here is what you can expect from today's session. We'll first begin with opening remarks by our founder, Jeremy Collier, FAIR Initiative, which will be followed by a video and a short presentation by me, where I'll tell you about the climate risk tool, which we launched earlier today. It will give you a better idea about the kind of tool that investors have access to understand more about the risks in this sector. After the presentation, we're going to have a very high-level panel. You'll have the opportunity to listen to some of the biggest thought leaders who are driving change in the food sector. And at the end of the session, we're going to open up the floor to a round of questions. So with that, let me hand over to our founder, Jeremy Collier, for the opening remarks. Over to you, Jeremy.
Thanks, everyone. Thanks for joining us today. So I'm Jeremy Collier, and as Simi told you, the founder of FAIR. It's the fastest growing ESG network in the world, representing more than $70 trillion, over 400 investors. 70 trillion, I hope I said. Anyway, I founded it because for all the corporate talk about being green, a lot of the big institutional investors have a knowledge gap about the financial risks associated with the way we feed our planet. It's not just investors, politicians, journalists, even activists so often see the cause of climate change as planes, trains, automobiles, factories, and power stations. When people do talk about food, it's inevitably in terms of resilience or adaptation. But there's a huge case for mitigation here too, because our food system is not just a victim of climate change, but a leading cause of it. Intensive animal agriculture creates more greenhouse gas emissions than the entire global transport system. So we can't fix climate change without fixing the way we feed ourselves. And at FAIR, we're doing that by shining a light on the financial risks of business as usual, giving investors the research, data, and tools they need to understand the issues. I'm sure a lot of investors really do care about climate change, but the reason most are so keen to engage is that first and foremost, they are responsible fiduciaries. Their job, their duty is to think about their bottom line, materiality, not morality. So that's what we focus on, collating and analyzing the cold, hard data they need to make better investment decisions. For example, we've just launched, as Simi said, the latest edition of our climate risk tool led by Simi Thambi, who'll chair the panel today. You can measure what you can manage what you can measure. And our tool provides the measurement investors need. Simi will talk you through the detail, but the headline findings is that meat and dairy firms stand to lose 24 billion over the next 4 years if they don't change their ways. But numbers like that are only part of the story, because as well as data, investors want to know which way the wind is blowing. They want to know what governments are planning for the long term so they can get ahead of the change. That's why FAIR members led the successful campaign for a UN Sustainable Food Roadmap to match the one produced a few years ago for energy. We got 40 investors, $18 trillion to really demand or ask the FAO that we need a food roadmap. I look forward to seeing that when it lands next week, and I'm hoping it'll be as ambitious as it should be and set the sector on the path to transition. The final piece of the financial puzzle is the need for a level playing field. It's great that so many governments say they want to cut emissions, but as long as their development banks are pumping money into unsustainable, high emission sectors like intensive agriculture, it undercuts those good intentions. We need to realign those subsidies to support climate and nature goals, and crucially to help farmers transition for the future. So we can't fix the climate without fixing food. And we won't fix food until we fix finance, for which investors need information, certainly, and a level playing field. It's a big challenge, but the solutions, including the FAIR Climate Risk Tool, are in our hands. And with that, I'd like to hand over to our chair for today, FAIR climate economist, Dr. Simi Thambi. Simi's great addition to FAIR is that she brings a wealth of experience to the team having worked for everyone who's anyone in the world, the UN, the IMF, the Indian government. And for the past year, she's been leading work on our climate risk tool. And that's what she's going to talk us through right now. Simi.
Thank you so much, Jeremy, for those wonderful opening remarks, and I'm humbled by the praise. Now, talking of work, earlier this year, we launched the Climate Risk Tool. What is this Climate Risk Tool, you may wonder? The Climate Risk Tool is a scenario analysis tool which looks at the financial impact of climate change on some of the biggest livestock producers of the world. We look at companies across the globe, from JBS in Latin America to AACO in Australia. We look at companies producing beef, pork, poultry, and dairy. Now, wondering what this tool looks like? Let's show you that through a video. Over to the video. Okay. Yeah, can we're usually very bad with those systems. Okay, so right now you saw a quick video of what the climate risk tool looks like. Now, why did we create this tool? Now, there have been growing concerns in different parts of the world of some of the key climate risks that are affecting this sector. For instance, New Zealand plans to set a price on agricultural emissions. And in November last year, it even held a consultative meeting to understand how these emissions would be set. Ireland, where a large share of emissions come from the agriculture sector, has been discussing some of this, and as many as 1.3 million cattle would have to be killed to reach some of Ireland's targets of reducing agricultural emissions. Another key risk in this sector is feed prices. Now, for those of you who are aware of this sector would know that feed almost accounts for 60 to 70% of the total cost of any protein producer, depending on what protein they produce. Climate risk impacts are likely to impact the yields of some of these key feed crops. And the price changes are already evident in different parts of the world. For instance, earlier this year, in United States, the sowing season for maize was delayed because of the impacts of climate risk. Heat stress. Now, heat and humidity lead to the death of thousands of cattle in different parts of the world. In Kansas earlier this year, thousands of cattle died because of that. Now, these are just few instances which highlight that risks are increasingly becoming evident and they are financially material. Now, this is just one finding from our climate risk tool. It shows that almost 50 to 60% of the companies can operate at a loss in scenarios where we reach 2 degrees or exceed 2 degrees. And what is driving this change? When we look at some of the key drivers of this change, we see that the drivers are different across different regions. For instance, when we look at different regions, we find that North America is likely to be most impacted by climate change. And what is the underlying reason that is driving up the risk in North America? We find that the reason can be found in the feed composition of these key protein producers. Soya, wheat, and maize are the typical feed crops that a protein producer uses. And in North America in particular, protein producers have a high share of maize in their feed baskets. And climate impacts to maize are likely to be much higher in North America than in other parts of the world. So this is what is shown in the right-hand side of this particular slide. We see that the prices of maize are likely to increase much more in North America than in other parts of the world in percentage terms. Now, despite this, North American producers would continue to rely on domestic maize because in absolute terms, the price of maize would still be lower in other parts of the world. So international trade is unlikely to resolve this issue. Next slide. No. The second key finding that is relevant, particularly for this audience where we have the biggest policymakers of the world, is that carbon prices can be material and they can impact two similar cattle products differently, beef and dairy. Now, the right-hand side shows the cost increases to the 4 key protein categories: beef, dairy, pork, and poultry, and eggs. And the left-hand side shows the changes to the profitability. And we find that the beef producers will be most impacted primarily because of the high emission intensity per unit of beef produced. Now, that is one of the key findings in terms of pricing on agricultural emissions. Now, those were some of the 2 key findings that I wanted to share with all of you today. And in interest of time, I would like to maybe now open up the stage to our wonderful panelists who have joined us here today. And yes. Yeah, these are some. So let me begin by introducing our panelists. As I call out the names, I request each of the panelists to kindly come to the stage and please take your seats. We have Sean Kidney, who is the CEO of Climate Bonds Initiative, an international NGO working to mobilize global capital for climate action. We also have Luis Amaral, the CEO, Science Based Targets Initiative, a standard-setting body that sets ambitious targets, helps to set science-based targets for private sector. Our next speaker is Bai Yunwen, the Vice President of Beijing Institute of Finance and Sustainability, a think tank in China that provides research and cooperation platforms for Chinese green finance and sustainable development. And finally, we have Roberto Esmerel, the Senior Sector Specialist Climate Change at the Inter-American Development Bank, the multilateral financial institutions driving development financing in Latin America and Caribbean regions. Yes. Great. So let me start with my first question to you, Sean.
Oh.
Now, with Climate Bonds Initiative, you're overseeing green bond development programs in almost 6 continents, I hear. I'm also aware that the Climate Bonds Initiative is doing a lot of interesting work in promoting sustainable initiatives, and more recently, transitional finance. So could you elaborate a little bit more on that work and how that can play a facilitating role in driving change in this sector, the food sector?
Well, of course, we're working with you. So we are certainly leveraging the work you're doing at FAIR. But let me just frame it this way. You know the challenge. It affects every single area of society. The issues around land use, food are enormous, underappreciated globally, and the risks are underappreciated. So we work with investors primarily. We also have about $70 trillion in our particular family of investors we work with. They're all concerned about forward risk. They're all trying to figure out what the hell to do. All of their portfolio management strategies are short-term, not long-term. We've managed to develop this product, which is a thematic bond. All it is a bond. It's a bond with the same credit risk, real yield characteristics of any other bond, with just a simple different twist. The proceeds go to addressing a long-term risk, which is around climate. That's essentially it. It's as crude as that. And because it's so simple, it's gone from 2 billion outstanding to $4 trillion outstanding now and continuing to grow. On the back of that, we simply are trying to provide more guidance to what qualifies as a green bond and the credit support to ensure that the risk yield requirements of pension funds and insurance funds can still be met, because they've got to pay your pension when you retire. They're fiduciary obligations. So that's essentially it. But of course, as we get into the interesting detail, and this is where land use and food is especially important, there are other risk factors that we've got to start educating them about. I mean, part of that risk is simply forward default risk. In fact, everything is kind of forward default risk at the end of the day. New bits of data that will help you guide your investments in a way that will get a better long-term return. Essentially, is bringing the database, like your data tool is showing, to link sustainable returns with sustainable planet, or rather to make people understand that it's exactly the same. Now, of course, my focus is not on small investors. You know, the people, hedge funds and so on, they can make money in ups and downs. And I can remember one quote from a Citibank banker in 2009. Oh, it's terrible what happened to the world economy this last 6 months. It's a disaster. But it was really good 6 months for us. We made a lot of money because they make money on the up and the down. Institutional investors, universal owners, that is the large investors that are $500 billion or more, don't. They rely on a rising tide. They need the whole economy to prosper because there's no diversification strategy that allows them to get away from the problems. They need the world to get better, essentially, to get returns to pay your pensions. And that's what we're educating them with on the back of the green bond market. We've seen with green bonds taxonomies, which is guidance, what qualifies as green, become the norm. 50 countries have them now. We launched Rwanda's yesterday, or the first stage of Rwanda's. We're expanding the remit, the understanding, which started on renewables into transition investments, and SBTI have been doing some fantastic work on that as well, to resilience investments. How do you understand the right kind of, let's take agriculture, the right kind of agriculture investor that will survive the crazy volatility that we're now setting in with the 21st century to ensure future default risk is as low as possible? And that mix is really what it's all about. We expect to see the food and land use part to become, it isn't now, to become a large part of this market going forward, because it has to be, because it's such a major source of emissions. We've started in Brazil. We now have a bunch of bond issuers amongst agribusiness in Brazil that are using climate bond standards and criteria to issue green and sustainable bonds. And we have MOUs, the Ministry of Agriculture, Ministry of Finance, again, to use tough definitions. Of course, we're still working on new definitions. That's what we're working on at FAIR. We're working in India with in China with many parties, including Beijing IFS and the Agricultural Development Bank of China, and working in Europe, where this is really important. We need essentially to shift our entire capital flows in such a way that it's commensurate with an understanding of the future risks. The world is changing very fast and has to change even faster. History of returns is no longer a guide to the future, unfortunately. We now need to be looking at predictive modeling, if you like. And this is about predictive modeling. Fundamentally, that's what your tool is.
Fantastic. Thank you so much, Sean, for those views. Now, Louise, I would like to ask you the second question for today. Through your bio, I got to know that in the past you've been part of sustainability boards, such as Minerva, one of the largest Latin American beef producers, as well as, for tropical forest lines. Now, those are some unique experiences. I'm also aware that SBTI introduced the FLAG, the Forest, Land and Agriculture Science-Based Targets. Now, why the focus on the food sector? And how do you think this will drive change?
Thank you. It's a great pleasure to be here. And as you rightly pointed out, Simi, I'm leading the Science-Based Targets Initiative, which is a global initiative that sets the standards for what good climate ambition looks like, not what can be done, but what needs to be done in order to keep us on a 1.5-degree pathway. But my previous life, and I'm very glad to be here, was always on food and agriculture and finance. So it's like I'm going back home when it comes to the issue. But to your question, why is it so important that we launched a very specific guidance for the food and agricultural sector? Well, you pointed out, food and agricultural production is one of the biggest causes of climate emissions globally. 20% of global emissions come from land-based activities or farming. How we eat affects the climate, and the climate affects how we eat. That's the second piece. Olive oil's prices more than doubled after prolonged drought in Spain. Rice prices around the world are also on the up. And because there are many hot days that are above 35 degrees. So as you pointed out, it's both a cause, but also suffering from the climate change. That's why the focus on having created one specific guidance for the sector is so important. And some of the biggest and most influential companies in the world in this sector has also adopted, right? For example, Danone and Sodexo and Mars and Heineken are some of the companies that already had their very specific food and agricultural targets validated, which are those ones that are developed specific for this sector. Food waste reduction and diet shifts are also important measures within this paradigm shift when you're setting up a FLAG guidance. And the 1.5 temperature rise is impossible to be met if we don't tackle deforestation. Yep. So that's one of the key parts in which, for the first time, we're bringing climate and nature together. So the food and agricultural guidance have not only carbon accounting specificities, but have also commitments to no deforestation within the supply chains. Deforestation is responsible for 10% of annual global emissions. So again, if we don't tackle that issue, we are really not going to tackle our challenge on the food and agricultural sector. So to summarize, SBTI FLAG requires companies setting those targets to commit to no deforestation with a target date that is no longer than 2025. And with that way, we're tackling the two sides of the coin that you pointed out, Sean. There's the risk. So what you Sean, and you, Sami, presented here, the risk that physical climate risk has on the operations of the companies. But on the other side, we'd absolutely need to tackle the mitigation risk or the risk that these companies have on the climate. And that's what the science-based targets brings. So if you look on our table and the companies that have committed to, my call for action is, look at those, because those are the leaders that are really setting and tackling this issue from the bottom up.
Great. Thank you so much, Louise. And you pointed a good point, like 1.5 degrees, impossible without stopping deforestation appropriately. Now, my next question is to you, Bayunwen. Now, you have decades of experience working on finance and climate in China. Could you please share with us some unique regional insights about how China is driving change in this sector?
Thank you, Simi. I think the previous speaker already mentioned, the climate change and biodiversity loss are the two sides of the same coin. So it's very important to ensure a coordinated approach to address both issues. And in China, I understand in the past 5 years, we do a lot in tackling climate change, but how to build the link between the business and nature is still a new issue. So that's why in the last 3 years, we start some research and do some capacity building in this area. The first, if you want to a business to start to do something for biodiversity or the health nature, you have to have to find their motivation, let them understand, the impact of finance on the provision of key ecosystem services, and also the consequences of biodiversity loss for the financial stability. So like climate change, we always say the biodiversity loss pose the financial risk to both the business and the financial institution. So this risk can also catalyze into physical risk and the transition risk, as Sean just mentioned. And the physical risks are very easy to understand. The ecosystem services they, vanish, and the business lose their money, and also this risk can translate to the financial institution. And also, on the other hand, the policy and market are gradually moving towards to the sustainability and nature-friendly approach. So the business and the banks, they have to deal with this increasing, the strictly policy. And this could be the kind of like a transition risk. So if a firm can identify this dependency and impact of their asset and ecosystem and nature and address it in the early stage, so they can prevent this risk associated with the biodiversity loss, and also can turn this risk into business opportunity. And as you mentioned in the video, this definitely require the conducting the biodiversity risk scenario analysis and the stress testing to provide some evidence-based, the information to them. Yeah, I think I stop here. Yeah.
Okay, great. Thank you so much for highlighting the relevance of biodiversity along with climate. Roberto, now tell us more about the work of Inter-American Development Bank, particularly in the context of the livestock sector, and also highlighting the climate mitigation and adaptation aspects of the work.
Well, first, thanks for the invitation. I come from the Inter-American Development Bank, one of the multilateral development banks of the region. We serve to Latin America and the Caribbean, and we continue working with national and subnational governments in order to obtain or to achieve the climate goals and the sustainable development goals. And as you, we are always sharing about our investors in our case, our countries. So you are always looking to reduce the risk for private sector. We look to reduce the risk for national economies and subnational economies. Here we are present as a group. We are the Inter-American Development Bank, the IDB Invest, and IDB Lab. So we have three different roles. Mine, working with national government, IDB Invest, playing with or working with private sectors, and IDB Lab, the role is working with communities. Much of the work we are deploying in the region is related to agricultural issues too. And one of the tools that we have, all of the multilateral development bank has, is that we deploy and we develop a methodology to track the mitigation adaptation present in our operations. So for example, all the operations that are funded with our resources have to comply with the Paris alignment. So we check if the investment we are doing and the technical cooperations and the grants we are granting are aligned with the NDCs and are aligned with the long-term decarbonization plans and strategies, and are consistent with the objectives of the countries. On the other hand, we have a climate finance goal. So, for example, until this year, at least 30% of our portfolio must be related to climate. So, in some of the sectors, this interesting sector, of course, we are really always looking to be climate friendly. And now we, as a group, made yesterday an announcement that IGB Group is set to triple its climate finances to 150 billion over the next decade. So for us, it's a really important issue, and we are making research and dissemination, working with ministries of agriculture, environment, and all the sectors in order to to promote resilience and mitigations in these areas. So, but later I can talk a little bit more about the latest publications in this area that we have been working.
Great. Thank you so much, Roberto. Now we'll have the second round of questions. And Sean, my second question to you is, now some regions have adopted green bonds more readily than others. What are some success stories that other financial markets can learn from, particularly for this sector?
Look, there is no fixed income success story that compares with green bonds in the last 10 years. It's been revolutionary for portfolios, and the scale of appetite amongst large institutional investors now is such that, to be honest, if I could find $10 trillion tomorrow, I could place them. It is that deep. Now, as I said, there are constraints. Risk yield is a constraint. Essentially, what we're talking about is a swapping opportunity. So people want to swap stuff which is not green with stuff that is green into their current risk yield appetite frameworks. We would like them to increase their appetite for emerging markets. A separate discussion, but that is something we're also working on. And there's a simple argument there. Yield is going to come from emerging markets. It's not going to come from rich countries. I mean, there'll be a little bit, but if you need to have a greater allocation to high growth markets, and in the green space, it's worth noting that 70% of all capex on mitigation in the next 30 years is going to be in emerging markets. And the resilience is going to be a similar kind of question by the time we've finished. So just looking at the investment pipeline that's coming through, you would think you want a greater exposure. And I've got a few asset owners like CDPQ in Quebec that is already significantly increasing their allocation to emerging markets. But what we've got to do in the short term to get everyone sort of comfortable, it's a bit like putting your toe into a hot water bath. People need to just sort of put their toe in for a little bit first, get used to it. So we need a lot of green bonds, including food-related investments and green equity and so on. We're, by the way, now certifying transition plans for companies, and next year we'll start certifying food-related transition plans for companies, so a company can get a certification as well. We need those to be coming through at a risk yield appetite that they are currently aware of in richer countries. Credit support. So at this COP, we've had a lot of announcements from a bunch of development banks around new credit support facilities and leveraging public sector capital, including IADB. That's doing a great job in Latin America on this issue. What that means is a lot more companies and governments can now get support to issue at a risk yield that will quickly and easily fit into the portfolios of rich country investors. We get the river flowing this way. Once the river starts flowing, as happens in every single market that's been developed over the last 100 years, as long as the substance is solid and it's not made of crap, so I lived through the 2000 crash, we'll put that aside. We believe this will keep flowing, it'll grow, and we will see much more appetite for emerging market debt and other investments. This has already started, by the way.
Mm-hmm.
We know that when it comes down to government-related bond issuance, including, by the way, if it was food-related, and then I'm thinking of NABARD in India and so on, or ADBC in China, that there's already a lot of demand for domestic currency. This is a big change in the last 5 years. And in Latin America, we've seen some issues. We've seen the Chilean government issue sovereign green bonds, for example, in domestic pesos, with the lowest interest rate they ever received for a sovereign bond. And they also got the lowest interest rate ever received in a US dollar sovereign and in a euro sovereign. And then we had another company come to market a little later, not so much in food, that got the lowest interest rate ever received by a corporate in Latin America with their first green bond. And now they have a whole program. So you can sort of see this as starting.
Yeah.
We need to now expand people's horizons to include this universe. And that's the job you're doing.
Great. Thank you so much. That's a great segue to maybe Luis. So Luis, thousands of companies have set science-based targets so far. Can you remind us how many, first of all? And then what are some challenges in science-based target setting process, and how can companies overcome them?
Thanks. When I joined SBTab about 2 years ago, was about time of COP, and at that time there were 1,000 companies with targets certified, or with targets verified. Last COP there were 2,000. At this COP there are 4,000, and there are an additional 2,000 that have committed to setting science-based targets. So what we're seeing here is really moving from progression evolution to exponential revolution. And that's what we need if we're going to keep our planet under 1.5 degree. We cannot think progressively anymore. We need to think exponentially. And that's what we're seeing happening with SBTI. That's the good news. The challenge, obviously, there's challenge. It's not easy, right? It's not easy to set a target. You have to be ambitious and you have to really commit to it. And I think one of the key things that we have is that we know that scope 3 emissions, which are the emissions that are on your supply chain, or if you're a financial institutions, the emissions of the folks you fund, that's 11 times higher on average than the emissions that you actually have on your actual operations. In food and agriculture, probably higher, and in the financial sector, definitely higher, because pretty much 100% of your emissions are in your portfolio. So the biggest challenge tackling scope 3. How do we deal with that part of your impact that is not 100% on your control? And there are ways of measuring that, and there are folks that are working on trying to measure exactly the emissions. But the easiest way, the quickest, the one that can get going now is bring everybody in, engage your supply chain, engage the folks that you finance, because if they're in and if they're doing their job, that means your scope 3 emissions are also going down. That's why I have launched several supply chain engagement systems in which when you're deciding where to buy from, where to invest, look if those companies are an SBTI target or not. Bring them in, because the more they're in, the easier it gets.
Mhm. Right. So my next question is to Yunmin. Now, you do a lot of work in biodiversity-related financing. Could you talk about some of the physical and transition risks in the context of both climate and biodiversity? And maybe also give some examples from China.
Yeah, I think, as you mentioned, the physical losses, the first idea comes into mind is if we lose one kind of a bee, the agriculture business will, will be affected by certain species. So that will be easy to understand. And another, I think the difficulty is to understand the transition, the risk. And because it really need long-term to understand what's the policy change. And only having this awareness, I think, is not enough. We also need some, enabling policy and enabling environment to make the financial institution to act. So in China, we also do some research regarding the area with the people from China, and we want to increase the profitability of such kind of project. The efforts including to design the design the standards for the biodiversity friendly or nature friendly projects to guide financial institution to identify such kind of project. And because sometimes for investors it's hard to find this risk, and it's difficult to identify this risk. So there will be some taxonomy to help them to achieve it. And the second is to develop a range of financial products. Sometimes, we have some workshop and discuss what innovative they have done. For example, we invite ADB, AIIB, and because they have some project there, they use a blended finance model, and they try to use some, ecological risk as a collateral. They use it as a collateral to do some lending progress to enhance, the credits of the clients or the project. Such kind of innovation, is really interesting. And the third one is we also need some requirement from the supervisor to do the information disclosure, because disclose not the risk, but also the opportunities, and ensure the market is transparent. And the final one, we think it's also very important to design the incentive mechanism, because the bank cannot do once. So they should do that in a long term. So for example, like China's central bank, they develop some monetary policy tools, such as interest subsidy or guarantee, to offer the low-cost funding for the nature-friendly project. Or they can incorporate those performance of nature-positive lending of financial institution into NPA. So in doing so, the banks have some motivation and are able to join this sector. Yeah.
Okay, great. Thank you so much, Winnie, for that remark. And now we have the final question actually for you, Roberto. Now, what is the role of just transition in food systems transformation, especially in the context of small farmers and large-scale factory farms? And what are some challenges that need to be overcome?
Thank you, but I'm gonna finish and comment some of the answers of the other speakers, and thanks Son and Luis. Of course, we have been working in the region, and one of our main areas is to work in innovation. So we have been working in bonds for a long time, and we have deployed blue bonds, green bonds, sustainability bonds. We have worked with other institutions in debt swap for nature in Barbados, in Ecuador, and we are trying always to include as an essential part of every operation climate goals. And no matter if our main client is national governments or commercial banks, we are always including climate indices. And one of the issues that people doesn't notice or doesn't know is that we do a lot of capacity building for commercial bank officers. We have technical cooperation for indigenous people, for all peoples, small producers, big producers, related to sustainable agriculture, sustainable cattle. And that's a lot of work. For example, now I'm based in Ecuador, and we are promoting a lot bioeconomy. But not only with the small commercial banks, we are having technical cooperation and grants with the people, because we can have bioeconomy or sustainable agriculture if they don't know how to do it. So one of the main challenges is that we are always, since the bigger areas, promoting these issues, but people and small producers in the farms doesn't know how to do it. So we have a lot of money in the region giving capacity to the person's knowledge in order to contribute and to really make a space in their small lands to contribute to the fight against climate change. I think now the countries are more open to these innovative figures. Almost all the countries are approaching us to talk about bonds, debt swaps, commitments, and we are happy to work with them. And we continue working with the people, but because it's not only the supply, the offer, you have to work with the demand, with the people in the fields in order to achieve something.
Great. Thank you so much for highlighting the importance of capacity building. I'll open the floor to one question in interest of time. So if you could. Okay, yes, can we have? Yes, we'll take a couple of questions all together, and then the panelists can answer.
I want
So
to
you
thank
should get
everyone
data.
for your work. I really appreciate it. I'm wondering your perspective. So
After this.
when we work in the public markets, I have an ETF listed on the New York Stock Exchange. We take the FAIR tool and we explain to people that the risk in the current food supply system is so large, and that there's a push to have a transition. At the same time, we take our ETF and we say, we have a third-party certifier that our ETF has a global warming temperature potential of 1.18 degrees Celsius. So we show them that innovating to replace animals and have a stronger, more resilient system will actually stay well below 1.5 degrees Celsius, and even indeed lower their carbon footprint. But we see that they're hesitant to move forward in food systems transformation and investing therein, because it's contrary to what they see in their natural life. They eat a hamburger, they think food is not under threat.
Yeah.
And so I'm wondering, when do you think that there'll be confidence that the food system is going to change and investors will get in?
And Louise might have to leave, so yeah.
Yeah. Well,
And
thank
Louise-
you, and I'll be very quick. I think it's great we have the bond and the financing mechanism, and with SBTI, we have the ambition, the corporate ambition. I want to bring the consumer in. The consumer, when the consumer is prepared to pay a price premium, the business model works. We are seeing that in everything. Now, we are India's largest vegetable oil producer, and we are finding that we are trying to make it green. So it uses gray hydrogen. We will replace that with green hydrogen. But the largest Scope 3 emission is the natural gas that people use for cooking fuel. So how can we take a lot of the brilliant work that you have done and package it in a way that the consumer sees the consequences of their choices? Because that will be the missing link with the finance and the corporate ambition. And I think it'll make business models work.
Great. Can we maybe hear from the panelists? Okay.
1 second.
I will be super quick. Question for Sean, actually. So you highlighted the need to increase risk appetite for emerging markets, but now food and ag in emerging markets is sometimes a hard sell to mainstream investors, right? So to what extent do you think blended finance is crucial for that, shift in capital flow to happen?
Luis, maybe you could do it. Then, of course, we understand.
I'm so very sorry. Apologies for everyone, but I have to run to my to my next one. Otherwise, I'm going to be late and it's going to be rude within. So I deeply apologies.
Anyone who would like to give?
It's a simple answer. So, how do we make real difference here? Of course, there's just two steps here. The first step is we've got to be clear what we've got to do. We spent 30 years ignoring the science. And that's why we're in this hellhole of a climate problem, where we have to reduce emissions up like a cliff. We have to bring science into the room. And that applies to the sustainability of food for a change. There is no shortage of great factoids. Sydney had a few, but we're not acting on all this. So let's bring it in. That's step one, a clarity of guidance, and link it in the work we're doing to risk, to future risk and so on. There's a story about that risk. Some of that story is related to opportunities in changing behaviors, such as China's consumers and their desperate desire for quality food, for example. And that's the story we sell in Brazil. If Brazil wants to maintain or grow market share in China, it has to look more like New Zealand and less like a low-cost producer, which means moving up the value chain, including sustainability, etc. So you've got things like that. Then the second part, the way you get things moving, the way you get the river flowing, is blended finance. But what is blended finance? Well, actually, it's a lot of things. It's a vast toolkit. The simplest and crudest is risk mitigation. But of course, there's a whole lot of structuring opportunities there on risk mitigation too. First loss provisions, funds. Sometimes there's just regulation. A little bit of regulation to ban something, make something else look much more attractive. That's also blended finance. So there's a whole toolkit, but absolutely, we need to change the course of the river, and that's going to require intervention. And so let's just call blended finance a wide variety of short-term interventions that'll shift the flow of capital. And yes, you're on the right path.
Roberto, would you?
Well, maybe that's one of the big challenges, of course. It's not only low carbon production, you have to develop low carbon lifestyles in the population. And that's an issue that we have been working for a long time. And we have been supporting the national and subnational governments in the development of policies. But of course, it's not as quick as everybody wants, but one of the other issues we are working a lot in nature positive investment, and the impact of, for example, food production and biodiversity is really known. So every time we add more information, more data, well, to create new policies and to work with people, with end users of everything, I get we are approaching and we are getting closer, but of course it's not as fast as all of us want.
In interest of time, I'd like to close the session right now, and you're more than welcome to please connect with our speakers if they have time after the session. Thank you once again for your patience, and we hope that you found our work interesting, and please log on to our website for more information about our work. Thank you so much.